Alright, let's talk about what's been going on with the debt structure of Porch Group. There's some recent news. Is it good or is it bad for the company? Let's explore this in a video today. So 3 days ago we learned that Porch Group did something called a secured notes issuance. And this was done via private placement, so it was a private broker. And in this case, some due diligence will have been made of the company. So somebody looked over the books and thought it was a good idea to issue this debt and be the sort of realtor in between and make this deal happen. And in this case, the terms of the agreement was that the debt was issued at 95% of par. So what does this mean? Well, it means that Porch Group will not get 333 million. It's getting 95% of that amount. So this means trading below par. It's common with debt securities that have long maturity, because this is a refinancing, and we will get more into that later. However, in this case, we also see that interest rate on the debt is going up from a amount below a percentage point to 6.75% yield on the new debt. And this is a result of the new interest rates environment where capital has become a lot more expensive. But as a result of this new debt issuance, Porch Group has the opportunity to repurchase 200 million of unsecured notes that are due in the medium term. So from a prudency perspective, this is a move on the side of caution and safety, refinancing medium-term debt to becoming long-term debt. It's like securing your mortgage with a 30-year mortgage rather than going variable interest rate in the beginning. So it's a prudent move from management, but there's one thing in the deal that I don't like, and that's that they can use stock at the value of $25 a share as a convertible. This means that there's room for dilution in the future. This new debt instrument, these new secured notes, will come to maturity in 2028. That's 5 years from now. A lot can happen in 5 years, and the company has a really low value right now in terms of what the market sees. And this deal, in my opinion, caps the upside a bit by putting the value on $25 a piece. I mean, we see the macroeconomic trends right now with the housing market and with the things that are going on with interest rates. It's a direct result on the terms on this debt refinancing. But 5 years is a long time away. A lot can happen. And in my opinion, I think that in a bullish case, the stock could potentially go higher than this. It depends on what happens in the market, if we get a mild recession, or if the worst has already happened and the stock market takes a turn. It's really hard to predict when the bottom is. But in my opinion, one thing is certain in my mind, and that is that in 5 years, this stock will be trading a lot higher than it is right now. When doing the valuation, when looking at revenue, when looking at the balance sheet, when looking at the vertical and seeing how the different areas of operation support each other, I think that there's potential for a big bull run in this case. It's one of my big bets. That's why I'm doing a video on it, covering refinancing on medium-term debt. That one of you guys, one of the subscribers, asked me about this refinancing in the comments. So thank you for that. So Now we covered the deal, we covered the terms here for the 333 million, the new interest rate here of 6.75%, the new maturity in 2028, and the right to pay back with cash or with stock. Those were the major terms in the deal. But one thing that we need to point a finger to and give attention to is that this was a private placement. Remember, I talked about that in the beginning. This means that there was done some proper due diligence in this case, and a buyer and a seller was connected in the debt market, and the organization in this case that made the deal happen have looked more into the balance sheet and found it to be a prudent move. And 6.75% in interest rate is by no means a junk rating in this environment. Sure, it's a lot higher cost of capital, but as I stated earlier, that's something to be expected in an environment of rising interest rates. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now, bye bye.